What's up, guys? My name is Andre, and in this video we're going to be covering the ORB by levels report on edgeful.com. So specifically the by levels, which is in the sub-report over here. It is the by levels in number 7, the sub-report. We're looking at YM in the New York session in the last 6 months. So let's look at what this is really measuring here. So we're going to go to Trading View. You can see that I have this blue box and this green and red line. This is my market sessions indicator and my ORB indicator. And what I want to do is tell you how to get access to them. And you can go off to the right side over here, click on the Trading View access. You're going to see this pop up. Put your Trading View username in this area here. You can find your Trading View username at the top left, right over here, the profile button. You can see my username is edgeful. Yours will be something else. Once you put it in there, you click update. You're going to see in your indicators section, this invite only will appear and all the indicators will appear here. The one that we want to use is the market sessions here and then the ORB right over here. So, okay. You can see here, let me just go to a smaller time frame. Okay. So you can see here that the ORB is right over here. So it's the first 3 5-minute candles. It is from 9:30 to 9:45. It is the high and the low of the first 15 minutes of the market open. If you're using the London session, that would be from 3 a.m. to 3:15. If you're using Asia, that would be from 7 p.m. to 7:15. It's always the first 15 minutes of the session. Now, this indicator will automatically plot for you every single day the high and the low of that session. And what's really important about this indicator is it will also give you the ability to plot the levels as well. So you can see here, we have minus 0.5, -1, -1.5, etc. All of these will be plotted automatically for you using this indicator. So you can see minus 0.5, -1, 1.5, 2, etc. You don't have to turn all them on. But what these do is plot the orb size downwards. So in this case, this orb on YM is 138 points. This is the orb high, this is the orb low, and then you go down 138 points, and that is the -1 extension. So imagine you just took the orb range and then stacked it below. And then from here, so you can see this is orb low, this is the minus 0.5, which is this one right here, and then this is the -1. So now if we go from the -1 right over here to the -2, that's another 138 points. So you're always just stacking the orb size above and below. So that's a very important note. So if you want to turn on the ones above, you literally just go over here, plus 0.5, +1, etc. You can see them all plot right there. So 138 points right here from the high. Now, I'm going to hide these positive ones. Let's focus on the negative ones here. So pretty much what this report measures is how often each of these will be hit on any given day. What I recommend is to filter this based on the day that you're looking at. So if you think that today is going to be a breakdown day, or a day where price only breaks to the downside of the orb, which I recommend before looking at this, before continuing to watch this, I recommend going to the standard report and watching the video there if you're not familiar with the orb. I recommend changing this to be breakdown. And what this is going to do is filter only for the days where price broke to the downside. So let's say you're bearish here for whatever reason, and you want to know, and you're short, and you want to know how often price will reach each of these levels. What you can see here, and I'll add some more. What you can see here is that 82% of the time price will reach this 0.5. 73% of the time it will reach the -1. So now, in your actual trading, how are you going to apply this to your trading? If you're short, you pretty much are going to want to hold your winners until you get to at least this -0.5. Because there is such a high probability that it's going to be touched that you don't really want to take your profits before that. Meaning, if you take your profits here, you know that there is an 80-something% chance where price has touched this point here. The same thing goes for the 1. Now, I do think that typically you're going to want to take some profits off the table at this -0.5. It's obviously up to you and your trading and the confluence that you want to use. But there is still a very high probability that price will get to this point on a breakdown day. You can see, obviously, this day that we're looking at here is clearly an anomaly day. This is a massive, massive sell-off. Every day does not look like this. But you can see where the probabilities start to die out. So for me personally, I'm not really going to be expecting price to get to this -2 on any given breakdown day because it's less than 40% of the time. I want to focus on these three, and realistically, I'm going to have runners to the -1.5. I'm not going to be holding my entire position here. So that is a very important piece here about this indicator and this report as a whole. What I want to do is show you guys on the current day, it'll actually have the levels plotted out for you. So I'm going to flip this upwards so we can see with the labels. And you can see here, this is the 0 and the 0, which is the orb high and the orb low, then the 0.5, the 1, the 1.5. So actually using today as the example, let's look at the breakout days. So these are days that only break to the orb high. Click on that, hit save, and now you can see 85% of the time it touches the 0.5, 78 touches the 1, 57 touches the 1.5, and then only 28 it will touch the 2. Now look at what happened today. Price breaks out. Now, there's no order in which these get touched. If you want some information on the first break, which is just the first breakout, then the break back in, you should look at the by performance. This only measures the first breakout. So check that out if you're interested in just the first break. But what this is doing here is just filtering for any break on a breakout day, which means only to the orb high, which is clearly what happened today. You could see touches the 0.5, touches the 1, touches the 1.5. You can see these are three high probability areas, and then it doesn't really tend to extend. So that's an important piece here. It does not tend to extend to the 2. So this could also be, this is another way to use it. If you didn't catch the move long, this is a great area where you can start to get short, saying I don't think that this area is going to get touched. So that's an important piece here, where you can say, I don't think that this area is going to get touched. I want to start to get short, expecting a reversal. Now let's look at some of these customizations. You can filter by orb size, first of all, which is going to filter down only for orbs of specific sizes, which is specific to from the orb high to the orb low. Like today was 0.55% on YM, so you can filter that here. This is where you can change the orb time frame. So right now, standard, universally, it's 9:30 to 9:45. You can change this to be whatever you want. And you can change the breakout criteria. So pretty much in this case, I'll try to find an example pretty quickly. It's typically easier on a 15-minute chart. Let me try to find an example here. Okay. This is a great example of if you're looking by wick, breakout criteria by wick, this would count as a double break day because price broke out to the top side of the orb. And let me just hide this quick. Price broke out clearly to the top side of the orb. And then by wick, it touched down here as well. So this was a double break day. But if you look by candle close, this would be a breakout day because there was no 15-minute candle close down here. So, sorry, I forgot to change this. When you search by candle close, this is where the candle time frame sets in. You can see set to candle close. So what we're doing here, so you check by candle close and you check here, and then now I'm going to go to, let me just change this to all days. You can see that there was no candle that closed down here, so this day will be filtered for a breakout day. If you had by wick, this day would be a double break day. So that's really important. Now, candle time frame, this is the actual candle time frame that is used to set the candle closures. If you have by wick selected, it doesn't matter. And then the day type, obviously this is breakout days, breakdown days, double break days, whatever. And then here is the break type. So this is actually, funny enough, the first break. So let's look at that major sell-off day. Or actually, yep, right here. So this is the major sell-off day, and I'm going to add back my levels here. And what you can see, so what I'm going to do here is I'm going to go by wick, and I'm going to go by break type to first. So all breaks considers any break throughout the day. Doesn't matter when it is, doesn't matter anything. So now again, we're looking at all days, we're looking at all of the data. Now if we go to first break, and now we change this to breakdown days to cover what we're just looking at here, this day here, you can see that on the first break, there's only a 50% chance that price will reach this minus 0.5. So let's go to a smaller time frame here. Go to a 5 minute. Okay, there it is. Okay, so typically on the first break, which is this candle right here that broke out of the orb low, it's pretty unlikely that price, well, it's a 50-50 shot whether price is actually going to touch this point right here before going back into the orb. So in this case, it touched the 0.5 and the 1 before going back into the orb. And then here, your count, you're not counting anything past this. So all of this is ignored here because you're only looking for the first breakout. So you're looking from here, down, and then back in. Now your calculation is done. You're only looking for the first break. So let me try to find a different example here. Here's another example. You're looking only at this move here. So let me add the upward ones as well. So in this case, it got to that 0.5 and then retraced. It did not get to the 1 on the first breakout. So that's exactly what this first does. So really, there's two ways to use this. One of them is to set your targets, realistic targets on how often price will actually reach these levels. The other one is to take reversals. This day is a major sell-off day. The data shows that here. It's very unlikely for price to get all the way down to the -4, but it does happen, obviously. And if you guys have any questions about this, please don't be shy to reach out to our support right over here. And if this video was helpful, please subscribe to the YouTube. We have a ton of valuable trader content on there, all data backed. Appreciate you guys. Have a good one.